Hey everyone, before we begin our podcast today, I did want to let you all know that I will be now hosting the Elevate Cleveland podcast on my own. Dominic has taken a new job elsewhere. He's out doing bigger and better things and will no longer be with us. So I look forward to giving you guys a new episode every Friday, just like on schedule. And Dominic, we wish you the best of luck in your new career and hopefully we get to see you again soon. Hey everyone, Chris Doyle, Elevate Cleveland, podcast number 16?
Elevate right? Cleveland, I love it.
16? Yeah. All right, today we have Yoshi Nakamura. Yoshi, how's it going?
I'm doing great,
Cool, man. So, hey, just looking at your LinkedIn, you've been here, there, everywhere. You've been in, Wall Street, in Cleveland, you're a two-time state champ, went to Wharton. I mean, a lot of things you just haven't done, right? So
it's out there somewhere, but
before I get too much away, just talk about yourself, plug yourself real quick. Who are you? What are you doing? What are you doing today?
Sure. Yoshi Nakamura, founder of NAKA Capital Partners, which is my own investment company. Launched that back in 2020 into the recession. So we want to talk about building something through a tough period of time that should last forever. I definitely did that. And our team did that. Born and raised Elyria, Ohio. So often my wife jokes around and she's from Gates Mills and the nice side of the tracks. And I like to look at and think that, I'm from the rough and tumble side of the
Sure.
track. So that's all good. Went to St. Ed's in 1997, was a two-time state champion. But prior to getting into wrestling, most of my career was spent in judo. Mm-hmm. My father was an 8th degree black belt, one of the highest ranking judo instructors in the world, and came from Japan to teach judo around the world. And ended up settling in Ohio, married my mom, who's a 4th degree black belt from Rhode Island. So we definitely didn't mess around at home. Just nothing but butt kickings if we got out of line.
Imagine Saturday nights.
Oh, God. Or judo practice if you got out of line. Yeah. My dad definitely put his hands on me. But on the judo mat, let's be very clear. It was legal.
Yeah.
All kidding aside. So it was great. I had a little bit of a tough upbringing. My father passed away when I was 13. I had a younger brother that was 5, a sister that was 3. My mom was a single parent, worked at St. John and West Shore Hospital. We struggled. We didn't have a lot of money. But somehow, some way, my mom kind of figured that out. Got me to St. Ed's. And as mentioned, we won 2 state championships. Always had this strive for excellence in academics, not just in athletics. So I ended up going to the University of Pennsylvania, the Wharton School of Business, and graduated with an undergraduate degree there from Wharton. Mm-hmm. Went on to work on Wall Street for 14 years or so. Worked at Citi, so I was one of the top-ranked institutional brokers on Wall Street for a long time with some of our major hedge funds, and then went on to run our hedge fund strategy for our equities division at Citi. In 2018, I had a chance to take a shot at helping build something that's never been built before, and I left Citi to join Mike Novogratz, who a lot of people know in the cryptocurrency space, or really just in the private equity or macro world,
sure,
as one of the top guys out there, and helped him launch Galaxy Digital. Galaxy Digital is the first publicly traded cryptocurrency merchant bank in the world. And
you launched that when?
That was in 2018.
Gotcha.
And then in 2020, left to launch NAKA Capital Partners.
Again, just here, there, and everywhere, right?
That's right.
What are you doing today then?
It's really focused on, right now, we just made our first acquisition for the consumer side of our business. Mm-hmm. We got very focused. Actually, this is an interesting time because our thesis is playing out exactly as we speak over the last couple of years on why we want to be in the restaurant space. And I'm not talking about the casual dining sit down. I'm talking about QSR, quick serve. So we got very close to and got to know the executive and management team of Bojangles, and we've been following them for quite some time. I actually have a close relationship with the private equity team that actually owns corporate. Mike's an investor, as well as a few others I know. One of the reasons why I focused on that business and specifically the chicken QSR space is because we thought that there was a secular growth trend towards chicken, number one. Number two, we wanted to be in the fast casual or quick serve space because there's a lot of trade down from casual dining into quick serve, especially as you see the quality of quick serve meals going up. Mm-hmm. So for example, I think of like Chipotle, right? People like Chipotle. They view it as a higher quality food. What's interesting in chicken versus burger, people view chicken, despite the fact that it's fried, as perceived to be healthier.
Yeah.
Not that I would use the word healthy, but I would say maybe better. And look at what's happening with Raising Cane's and Chick-fil-A and Popeyes. I mean, it's not just Bojangles, but Bojangles is a brand that's just not really reached out on the horizon yet. And they're positioned to really explode their growth outside of that Southeast regional footprint. So, where you look at a Popeyes or a Chick-fil-A and or some of these other businesses, they look like they're everywhere already. KFC, right?
Yeah.
We're taking a brand that has never really broken out of that Southeast region, and we're gonna bring it up, up north, whether it's Pennsylvania, New Jersey, or Ohio, actually.
And how many do you own?
So I own the stores in the greater Norfolk area, so Norfolk, Virginia Beach, Suffolk, Portsmouth. There's a network of franchisees that own stores down there, so it's mainly franchisee focused, and that's what I am relative to Bojangles.
Okay.
And we're there was a couple articles that just came out. QSR Magazine, which is one of the top restaurant magazines out there, they just did an article on us. So we're going to focus on helping build that Virginia footprint area.
So why are the sit-down dine-in franchises, is it solely because they're fading away solely because you think of COVID, and at the same time you're having an increase of the QSR, that trend is going up as the dine-in is going down?
Yeah, so it's actually been a secular trend that has happened over a long period of time where people are looking for faster meals.
So how long do you think?
Decades. We're talking about a slow decline over a very long period of time.
Sure.
Right? So COVID is an anomaly, right? So our thesis was you wanted to have something that was deliverable, that had a drive-through, and that had a high-quality product. So what's interesting about a Bojangles product is that it's a fresh, not frozen chicken product made from scratch biscuits, and more of the meals within the restaurant or that recipe or that menu, not recipe, is moving in that direction. So you do feel like you're getting the quality of a home-cooked meal, but on a quick serve level, which is really interesting. Whereas a lot of the other quick serve industries, they tend to package and it's reheat a lot of stuff. This is not the case with the Bojangles.
Yeah.
And you're seeing that with other chicken QSR businesses as well.
And I don't know. I mean, if you
and actually back to your question on secular declines, right?
Sure.
So,
okay. Yeah.
So quick serve and fast casual have been taking share from the casual dining space for some time. I think COVID probably sped that up. I wouldn't say that COVID was the reason. And the reason I say that is because what we realized is that delivery and drive-through were two very important components that help these QSR businesses thrive. And if you look at some of the comps that were out there for Popeyes and other stores, they're up, 30, 40%, after the first month or two post-COVID, really the COVID shutdown. You look at like a Chick-fil-A, I think they exited 2019 into 2020 with an AUV, average unit volume per store, at about $5 million. They're doing 8 now.
Oh
right?
my gosh.
I mean, think about that kind of growth
in
sales over a couple year period. And what do? All of their in-dining is really shut down, right? You can go in and order what they call carry-out, or you can order ahead, or you can do drive-through, or you can do delivery. They're not dining in, right?
Yeah.
And how long are those lines? Wrapped around
around
the whole building.
Yeah.
So,
I mean, you look at these operators, these Chick-fil-A operators.
Yep.
I mean, after 2 years, they're already making millions. You know what I mean?
I'm not sure exactly what the percentage is. They make very good money.
Yeah.
But yeah, they're doing well. So that for me is one aspect of what I've been focused on the consumer side. So
yes,
these businesses actually tend to do well in good and bad times, right? They're steady cash flow businesses. So when things get tough, casual diners tend to trade down to QSR.
Yeah.
Right. When things are good, more of the lower end will spend more money at fast casual places, as will the pie broaden. What's interesting about Bojangles is 30% of the consumers of Bojangles products make a household income above $70,000, which is pretty high when you think about it. So that's a big percentage. So that makes us believe that people who really like Bojangles and might want it would be willing to pay up for our DoorDash to deliver it to them. Which
how do you come up with that figure?
Stats, research.
Yeah.
Everything starts with data. We do our own research.
That's incredible.
Yeah.
I know you said you're in that consumer band right now, and you're also into Bitcoin a lot.
That's right. So it's chicken and crypto. It's Bojangles and Bitcoin. So the barbell approach of what I'm doing is what I learned on Wall Street and working on Wall Street for so long is people get so concentrated and exposed to one area. Like, for example, I worked at Citi. I had Citi stock as part of my compensation. I worked at Citi. That's who paid my paycheck. And I worked with hedge funds. I was so exposed to like one element.
Sure.
When the 2009 recession hit, or 2008, 2009, when things came crumbling down, there was so much wealth destruction across the board. Cash talks about that in the mortgage industry, right? And obviously the bank, Citibank, was tied to that whole issue. And what I realized is that, in order to really create wealth for yourself longer term, and there's a difference between being wealthy and then being rich,
sure,
right? And the gap is owning your own businesses, making your own investments, and then diversifying those investments. The crypto space is super high risk, right? Bojangles or QSR businesses, they have risk elements to them, but I think they're safer than what we're doing, in the crypto space. Those can go to zero, right? We saw that happen in the .com space. I saw that happen in crypto in 2018, and it can happen now. But it's about having a process on how you look at companies in that space, how you think about the management teams running and building those businesses, and then how you allocate your capital into those areas. And then in between, there's a whole host of other things. There's real estate. There's stock market. I'm a junkie. I'm a stock junkie. Like, I'm an addict when it comes to the stock market.
Yeah.
And
you were saying before you weren't too optimistic right now.
Yeah. And we were talking before the show. I'm sitting on a ton of cash right now, and I've been looking at putting money to work, and I started to, buy a few things, get invested. And then, when this whole Ukrainian-Russia thing happened, I actually started to build a short position in oil. And I stopped because stuff didn't make sense. And things were already hard as it relates to the supply chain. But when you started to see other things happen, especially the sanctions, what's really scary is that we already have a lot of supply chain issues globally still. We have a labor shortage, which has really caused a lot of angst amongst, businesses like mine, to all the way to the, Amazons of the world or Walmarts of the world. The problem is we're just really getting our feet underneath us and getting kind of back to a real life and a real economy.
Yeah.
That putting these sanctions on globally is going to slow a lot of things down, and there's going to be a lot of unintended consequences.
That ripple effect.
Look what happened to the stock market, right? So you see the stock market pull back. The only thing going higher is oil right now, because you're taking 15% of the global supply, or whatever Russia's percentage is, off the market. Nobody wants to buy it because everybody's getting sanctioned or they're putting a lot of sanctions on that impact Russia. So people are very hands off on buying Russian oil. And who knows what backdoor deals are going on with China and things like that. I can't speak to that.
Sure.
You are literally tightening a clamp around the world right now, that the tighter they squeeze, the more unintended consequences will be created from it. And part of that is this energy spike, right? So if you take that supply offline, you're driving oil prices higher, right? And there's all other trading dynamics going on different commodity desks and things that I can speak to as well. But you're seeing this parabolic impact on fuel prices that is now going to impact the consumer's pocketbook, right? So when you go to the pump, I mean, I think I paid $85 to fill up my truck's gas tank.
Oh yeah,
close to 100, and I paid obviously not half that, but a lot less than that a month ago. So you immediately the consumer starts to think, wow, like that's a lot. Like you take $25-$50 out of the average consumer's pocketbook, that impacts what they do or what they spend on. Here's the problem. Here's what makes me worried, is that when you do that and you create this exogenous or like parabolic spike in fuel prices that impact the consumer, plus you see the stock market implode, right? We got a lot of brain damage from a couple of years ago of this COVID thing that shut the market down, and everybody was like, oh my God, what's humanity going to look like?
Exactly. Yes.
Now you have a war going on where you can agree or not agree. I don't agree with war. I think it's bad, and I think what's going on is wrong. But like, you have all these like very worrisome things that are happening, and all of a sudden now it's being felt by the consumer because oil prices are impacting their pocketbook. And now I look at my 401k because everybody's talking about, oh my God, the stock market's rolling over, right? You look at your 401k and you're down 10, 15% already. And you're like, oh my God, this is like 2018 again.
Yeah.
Or I'm sorry, not 2018, 2020 again, right? Here's the other trick, or here's the other thing to pay attention to. there are so many people that took the money that they got from the government and they bought a bunch of stuff, but they also started putting money into the stock market. It was the first retail revolution back into the stock market that we had seen in a long time. They were buying crypto, they were buying retail, the retails were buying stocks as well. And we call it retail, meaning retail investor. Institutional investors are the investors I dealt with on Wall Street. And then you see these weird things like AMC go up when you know it's
just all the meme stocks.
Yeah, all these meme stocks go up, and you're like, that doesn't make any sense. Fundamentally, they should go out of business. They didn't. That consumer is very aware of what happens in the market, right? So not only are you looking at your 401k rollover, but you're probably getting whacked in your retail portfolio. Like there's a lot of things that are going on that it's going to impact the consumer and consumer confidence that could have a ripple effect on everything in the U.S. economy.
Well, like you were saying, hey, we were planning on maybe going to Mexico this summer. Well, all right. Well, now the cost of oil has gone up, so that they have to offset prices somewhere. They have to offset prices to consumers, right?
Well, think about it like this. So if I'm a consumer and I want to go to, by the way, first off, international travel, right? Anything to Europe or I'm sure people will still go to Europe. I'm sure.
I got my honeymoon in Europe.
Yeah, I was going to say there's probably great deals.
Yeah.
I probably would take a trip to Europe because I'm not as concerned as the average person probably would be. Again, oil prices spiking. What do planes used to fly?
Yeah.
Jet fuel.
Yeah.
Right? Jet fuel is going to go up, right? The airline industry and travel industry is just getting back on its feet.
Literally.
Cruise, airlines. Now, I've flown a bunch of times back and forth, and I've seen the planes packed, and people are comfortable flying. Problem is just the cost of the flight goes up, right? Right? And so people are like, you know what? Hey, we're not going to fly on vacation. We're going to drive. Now they're like, I don't know. Maybe it's not that. It's kind of expensive to drive too. And people start to second guess, even maybe taking the extra trip that they would have taken. That's consumer spending slowing down. That's consumer confidence impacting the market and the economy.
Yeah.
Right. And it will have a ripple effect on. Right now, I'm sitting on a ton of cash. I'd like to put it in the market, but I'm kind of like I'm waiting for the dust to settle a little bit. And I do have a housing project that's getting underway, and I'm was going to break ground. I haven't signed any contracts with any suppliers yet, but I'm looking at wood prices through the roof, and I'm like, okay, if I'm thinking about doing this project, am I top ticking wood prices right now, or should I wait because things are going to slow down, and they are slowing down? And if the supply chain does ease up here domestically, because wood tends to be probably a little bit more domestic than not, maybe I'll get a better deal if I wait. And then you start delaying some projects and things like that. Right? Not big institutional stuff, but on the margin, you start to see the slowdown that happen there.
And just speaking from my industry, a lot of different new trends are coming up where, hey, prices are for housing is pretty expensive, right?
Yeah.
You have a lot of people, at the same time, coincidentally, interest rates drop at a very historically low rate. At the same time, purchase prices are increasing dramatically, right?
Yep.
So you have a lot of
typical
people.
Interest rate economics, yeah.
Absolutely, right? So a lot of people these days, instead of getting into the market to buy maybe their second home, are just taking out home equity lines of credit and just adding on a third bedroom.
Sure.
Because they want to keep their low interest rate and they don't want to go ahead and buy another $100,000 or $200,000 home. Hey, let's just stay where we are and just add on to it. So again, it's having that, that negative effect for, a lot of people that aren't able to purchase a home. That hurts real estate agents, title companies, loan officers, so on and so forth.
Here's the thing about that. I question, so you mentioned the second derivative of second homes. I even question the fact that they're actually looking at doing the projects themselves, and they're talking about it. But now that you have this fuel spike and you have the stock market rollover, right? The consumer looks at two things: what impacts the pocketbook on a day-to-day basis, right?
Yes.
And then what impacts the future of their pocketbook, which is your 401k or your retirement plan or whatever you have your money stocked away in. We just got whacked twice in 2 years.
And not to mention, you were saying skilled labor, lack of labor, right?
Yeah.
The skilled labor, if I need a carpenter and he's got to do it at a higher premium, well, shoot, maybe I'll just have grandpa do it.
Well, here's what's interesting though. So there might be a silver lining in getting labor back into the market because things are more expensive. Things are starting to slow down. So people will start to take the work that they have to take as opposed to sitting on the sidelines and taking the work they want to take. Right. So that's an interesting psychological dynamic that's going to happen in the space. Where could I be wrong, and where's the other side of this mindset right now? Because I always, covering hedge funds my entire career, you always had to think of both scenarios because you could be wrong at any given point, and so you have to be able to flip your scenario on its head and then say where's the probability or risk weighted reward and bet to be made. And so where could I be wrong? if Russia and Ukraine gets resolved and they decide, okay, ceasefire, you know what, these are the 3 or 4 things Putin wants, NATO agrees, or they agree, Ukraine agrees, and they pull their troops out. Like, things will start to normalize quickly. But the longer that this persists, the more damage it does.
Absolutely.
Right?
Yeah.
So this doesn't age well. And it gets very long in the tooth very fast as it relates to the economic damage it could do. Because, again, we're already dealing with a recovering economy coming out of the whole COVID situation. Supply chain really hasn't been fixed yet. And the longer these tightened sanctions create issues with the global supply chain and dynamics, and that creates more slowdowns and higher cost of goods because commodity, palladium or whatever other commodity is coming out of Russia goes through the roof, oil prices and things like that. The longer that lasts, the worse it does damage-wise. So, we have to see. So I'm looking at both sides. The quicker the resolution, the quicker I put money back in the market.
Sure. Do you have any opinions? Obviously, so like Dan Crenshaw, I saw the other day, was talking about how much oil we get from Russia. I think it's like half a million barrels or something. Yep. But he said like the Keystone Pipeline, for example, would create, I think, 800,000 barrels per day. Are you an advocate for, creating more jobs in the United States to create more oil for the United States? I don't know if you have an opinion or not.
I do, actually. And I try to think of it from a economic business standpoint because, listen, I believe in electric cars. I love electric cars.
Sure.
And I think Elon Musk is a genius.
Absolutely.
When you talk about the stuff that guy's created, he put rockets and electric cars and the Hyperloop and this is like every kid's dream, right? Thinking of flying in space. And, I just commend and hats off to that. But that can work over time. But when you have these exogenous shocks and situations right now, for me, when I think about do I believe in certain aspects of green technology? Yes. And I'm going to choose my words carefully. Do I believe that drilling for oil domestically can help create jobs and help stabilize oil prices and help the economy? Yes.
Like immediately.
But you can't turn that on right now.
Yeah. Oh, yeah.
You can't turn it on. Like right now, and I don't know what the average the break-even cost for fracking is, but could you frack and start trying to get oil? It takes time to start these processes back up. Here's the other thing that a lot of people don't think about. Why would energy companies not want to spend more money on exploration and drilling? Why? Because their shareholders right now are telling them, I want the money back. Mm-hmm. I want cash flow. I want dividends. I want I want share buybacks, right? So they're not really looking at or incentivized at spending. And I'm not going to get into the politics of the Biden administration and them putting the crimp on oil production versus like the Trump administration, who was obviously pro, being energy independent, which, by the way, the United States is and can be energy independent anytime they want, anytime they choose to. Mm-hmm. So that's given the supplies that they found, down in places like the Eagle Ford Shale and the Scoop in the Stack and other areas down in the South. You have to try to put a rational lens on how drilling for more oil could help the economy. Could it do it over a long period of time? Yes. You can't turn it on right now. Mm-hmm. You can't turn it on right now. And that's a problem, right? Or we would. Like, you can release oil from strategic reserve. It's not going to make a dent in what's being pulled offline in Russia. Now, here's what's interesting. So, and shocking, right? So there was some comments around speaking to Iran about, getting production or sanctions removed and production from Iran. Yeah. Right. Low cost production there. Shocking. They're Venezuela, right? Really? We're going to go bring Venezuela into the mix? It kind of scares me. Again, remember when I talked about how I was worried? Like these are two countries that we typically aren't allied with, but we're speaking to them to try and alleviate a pain point. Mm-hmm. Think about that, right? You can't. You start to see these very concerning things that are happening, and it makes me worry that if this isn't resolved very quickly, and the longer it ages, the worse it could get economically for the globe, not just the U.S.
I'm only 26, right?
Yeah.
So when the 2008-2009 recession hit, I was like in 7th grade, I think, right?
Now I'm feel old. I definitely feel.
Yeah. And then obviously, COVID, the pandemic, March of 2020.
Yeah.
So really in my lifetime, I mean, yes, 9/11, but I was a little too young to really understand the complications.
Saw that one too.
Yeah, absolutely. So now going into the COVID pandemic, and now everything that's going on with Ukraine and Russia, it just feels like every minute there's something new, right? Yeah. I'm tired of living through a world where it's like, hey, every 5 minute, you take a 5 minute break, and then the next thing you know, there's another crisis going on. You know what I mean?
Yeah.
I feel pretty optimistic that we have good allies, with NATO, and the United States is very strong. And the U.S. we still have the dollar as the reserve currency.
Sure.
And so we're still very strong. And like you said, you're a very optimistic person.
Yeah.
But for me, it's almost like, dude, I'm only 26 years old and we're already going through all of this stuff. You know what I mean?
Yep. Let me tell you something that really used to piss me off when I was a kid. And I prided myself on working hard, consuming information, trying to make educated, calculated decisions based on statistics and probabilities and things like that.
Sure.
Tobias Lefkowitz, who was the U.S. equity strategist at Citi, unfortunately passed away recently. He used to tell me when I was first in the business, he's like, Yoshi, you don't have any of these. And he's pulling on his hair, like gray hairs. And, it was almost kind of like, you don't know what you're talking about type comment. He would never say that to me, but he would just remind me experiences and the tenure of experience is very, very important when it comes to these situations. Because markets trade with a similar rhyme and reason to what you had seen in previous times, right?
Exactly.
And so when I see what happened and when I saw what happened in 2020, I immediately was like, they're gonna pump whatever $3.5 trillion in the economy, buy Bitcoin, buy stocks, buy risk assets. They're reinflating assets, like they're done. Buy them. And my buddy Mike Novogratz, a bunch of guys on Wall Street, we all went all in. Right then there. I was thinking that there was going to be some opportunity right now where, you could kind of do that, but I don't know how long this lasts, right? There's no bazooka that's being shot off right now. It's kind of like, in actuality, this administration is putting more clamps around world productivity, I'm sorry, not productivity, but on Russia, and that's who knows what the unintended consequences of those. They're going to do everything they can, and the world is doing everything they can to stop Russia from doing this right now, right? And they're doing it with financial sanctions. And look at commodity prices and what's happening. So it's a little trickier to figure out. I will say a lot of the New York Wall Street hedge funds, they've what they call degrossed. They've taken their books down, taken money off the table or chips off the table. There's probably a lot of cash out there. So once this thing does turn or get resolved, you could probably see it rebound pretty quickly. I'm not gonna stand here and say that, I told you so it was gonna go down and then turn around but I'm being very nimble right now on what I'm trying to do.
And that's what I was gonna ask. Yeah. So do you believe at this moment cash is king right now, or because it sounds like you're not investing too much?
Yep.
So hey, I'm a 26-year-old kid. Maybe I want to go put money here. Maybe I want to go buy real estate. Maybe I want to open a brokerage, whatever have you. Is it better, in your opinion, to just, hey, keep cash on hand for right now?
We call it dry powder.
Sure.
Dry powder. And I like to have dry powder available right now. If you don't, you probably want to create some, so you can be nimble and make the investments you want to make, whether it's in the liquid markets, meaning the stock market or the crypto market, right? Bitcoin is one. Bitcoin is a head scratcher right now to me, because I've obviously followed it for a very long time, completely bought into it, obviously helping launch the first publicly traded cryptocurrency merchant bank, and helping run one of the largest trading desks in the world. But it's a head scratcher because you saw gold take off, right? And people kind of align gold and Bitcoin in the same manner. So meaning gold is gold and Bitcoin is digital gold, right? There's a limited supply, but it's the thing about Bitcoin is, and the genius about Bitcoin is, it's completely decentralized, yes. as you know, and I know we've discussed that before. It's not owned by any government or it's not a company. It's a completely decentralized network run by nodes or miners or validators in the space. which is what we call miners. It's shocking to me that people aren't using the Bitcoin network more than what I thought, because if you think about what happened in Ukraine, right? Russia comes in, people of Ukraine start to freak out, right? What are they? First thing they do? You go to the bank to get cash, right? The banks were limiting Ukrainian citizens to $3,000 so they wouldn't have a run on their banks. $3,000 in withdrawals. Three. Like, you could have $1 million in the bank and you can get $3,000. But if I had the ability to access that money, trade it into Bitcoin, I could put it on my phone, or I could keep my key on whatever wallet I had on whatever exchange, or I could have a login, right? A two-factor protected login. And I could trade it into Bitcoin, and I could walk out and go to Poland, and my family would have
just using your phone.
Just using your phone.
Yeah.
Yeah.
Hey, I need to go to Munich, Germany. Take me.
Yeah. No. But I mean, literally get your money out of the bank. And so what's crazy is, and I don't know what Putin's intentions are when it comes into Ukraine and takes it over.
I don't think anyone does.
But my assumption would be is that once he takes it over, he's going to, consume all the financial institutions and all the wealth in there, and there will be things that happen that I can't comprehend or know what's going to happen, but I just wouldn't want to leave my wealth in that situation to see what happens. And so you see a lot of people fleeing the country. And by the way, God bless all these other countries around Ukraine that are taking some of these refugees in immediately. Poland, I think they saw people lined up at this train station waiting for people to come, taking families, come with us, live with us.
Yeah.
I mean, I get goosebumps thinking about that.
Truly amazing.
Amazing.
I don't know you, and you were just, hey, here's a bed.
Here's a bed. We'll house you as long as we can.
It's amazing.
It is. Again, God bless the people that are doing that, and and whatever God you believe in, they all think that that's the right thing to do, and that's pretty amazing. But the problem is your wealth can get stuck in that situation, and I think Bitcoin should be skyrocketing higher in this situation. Plus, think about inflation hedge, right? Risky period of time, geopolitical risk, and now it would make sense to that to be a trade, but it hasn't. And the one thing you got to think about, and you got to remember with Bitcoin, it is 10 years old plus 10 plus years old, but it's still a risk asset, right? So gold is a risk asset; it trades up and down, right? Bitcoin is a higher risk asset, but it's supposed to be similar to gold. So the correlations to gold it gets there, but it's not quite there yet.
So a lot of people
more trades with equities than it does with
for sure. So a lot of people and I don't have really a stance on Bitcoin. I mean, it makes sense. Sometimes it doesn't make sense to me, whatever have you. But a lot of arguments that I hear about Bitcoin is, hey, it doesn't have, like Peter Schiff, I think, talks a lot about this, and he says
he likes to selectively pick charts to show that Bitcoin is not performing
for sure. And if you will, a lot of the arguments are, hey, Bitcoin doesn't operate like normal currency, like fiat currency.
It's not a currency. Yeah.
Exactly. Yeah. So, hey, if I can buy a banana on Saturday for X amount of Bitcoin and then it changes, next Saturday, how does the consumer react to that? Does it increase? Does it decrease? My head's everywhere.
Yeah, I don't use Bitcoin to buy stuff. I use Bitcoin as a hedge to the dollar.
Sure.
Yeah, then it's
a long term.
It's a longer term play against the dollar, but it's also a growth play because the network is growing. So the more people participating in Bitcoin, the more the network grows, and so inherently there's more value in the network.
So you shouldn't compare it to currency then, like.
No, it's not. It's not. No, currencies are meant to be stable, right? Like, and arguably there are currencies out there in the world, in emerging markets countries, or what we would call third world countries way back in the day, that currencies are worthless, right? Inflation or some weird government, printing of money has caused massive inflation issues, and their money's
Weimar Republic, the Deutsche Mark.
Bitcoin is a way for people now to hedge against those types of things. In the U.S., you probably don't have as much of a concern as you would, and I say that jokingly because in these other third world emerging markets countries have real issues. We don't have those issues, so I think of it as two areas. It's a store of value. Right.
Sure.
And it's a play on a network, growth, the growth effect of the network. So inherently, the value should increase over a period of time. So that's the way I look at it. But there's a story of this is what has always stuck with me about why you don't want to spend money on Bitcoin or using Bitcoin right now. At some point, the volatility may subside and you may be able to use it. But there was a pizza delivery guy there was a guy that bought a pizza and he paid his buddy in Bitcoin.
Okay.
And it ended up being like worth like, arguably, I think it was like hundreds of millions of dollars if you just kept it constant currency. You think about how expensive that purchase could be. Like if I bought a car in Bitcoin right now, or let's say in 2020 when the crisis hit, when the COVID pandemic hit, and it was a used car. Think about how much Bitcoin has gone up since then, right? And the valuing that would have been a really expensive car. Mm-hmm. So if you think about it like that and the pricing dynamic relative to the using Bitcoin as a way to pay for things, it means for paying for things, it doesn't make it. I wouldn't do that right now.
So do you go with any other cryptocurrencies other than just Bitcoin, like Ethereum?
Yep.
Or
Absolutely.
Dogecoin, or
not Dogecoin, but Ethereum.
No, not Dogecoin.
Not Dogecoin.
Okay, and
there's an interesting dynamic about Dogecoin we can get into though.
Sure. Let's talk. Yeah, sure.
So I'm a believer in Ethereum. Ethereum's network is like Internet 3.0, and so if you think about all of the protocols being built on the back of Ethereum, whether it's anything tied to DeFi, decentralized finance, or NFTs, or just the creation of real companies, logistics companies, or whatever it might be, they're the ones that are winning that war for sure. Gentleman named Joe Lubin, who's a co-founder of Ethereum and the founder of Consensus, the genius in what Ethereum did is that they created smart contracts. So if you are securing a block and trying to keep a record of something, there you can build in parameters around how that's managed. So think about, the mortgage industry. Think about title companies, all of that, right? And then keeping a track record of that, immutable track record of that over a period of time. I mean, I can't say that's happening now, but maybe 20 and 30, 40 years ago,
it's a huge disruption.
Are titles clean?
Yeah.
I don't know. Probably not. Like there could be some gray area there. So that's an area where if you kept that on a blockchain, that could work. People's identification, like identification protection, creating those types of protocols or businesses on the back of an Ethereum blockchain could make sense. Or they've talked about building it on the back of Bitcoin's blockchain, like identification platform. All of that stuff is still viable. It's early, right? And there have been a lot of people working on a lot of stuff at Ethereum. And Consensus, which is the company that Joe founded in conjunction with Ethereum, is genius because that focuses on investing in developers that develop on the back of Ethereum's blockchain. So it constantly pushes money and people and developers onto their blockchain. And he's done an amazing job of building that network and of engineers and coders. Because at the end of the day, the way I look at valuing a blockchain, or how I view if there is inherent value on a blockchain, is number one, what type of code. And I really lean on research developers, or I call them dev research analysts, that give you an idea of like how good the underwriting code is, or I'm sorry, the underwritten code of the blockchain is. Two, are there developers that are excited to come and develop on that blockchain? Right? So if you look at like Polkadot, right, they have a very strong following of developers on their blockchain creating different types of things. Ethereum is another one. And then the third aspect of it is liquidity, right? If I buy a cryptocurrency, is it tradable? Is there more liquidity being created in that token to trade it? So, for example, if it just trades in Asia or in Hong Kong, I probably can't trade it, right? Because there's some restrictions across the global footprint. But if it's traded in the U.S., if it's traded in Hong Kong, but it's compliant and can trade in the U.S., that could create liquidity and people could get more involved in that cryptocurrency. And inherently, the more buyers there are in a cryptocurrency, it goes up, right? As long as supply is somewhat constant or staying steady in its creation. Dogecoin, right? So what's interesting about Dogecoin is the code is Bitcoin's code, essentially, right? It was created as a joke, right? And by the way, everybody laughed, right? Everybody in the crypto community was like,
until everyone started making money. Yeah.
But what happened was because of this whole meme stock era where this retail trader or investor came back into the market and they not only bought stocks, but they're like buying cryptocurrencies at the same time. They're like, what about this Dogecoin? Like this kind of, it kind of became a meme cryptocurrency / not stock, but it actually created a following behind it.
Yeah. And a big
that
one,
network,
big one, yeah.
That network creation and that following, because the code is similar to Bitcoin, it stuck. And so we joked around about and constantly, on Dogecoin, but guess what? It has a real community behind it now.
People made money off of it, yeah.
Yeah, and so when you have that community behind a blockchain or crypto, that's very important to the sustainability of that cryptocurrency / blockchain that it's created on. Mm-hmm. So, people talked about Shiba Inu, and I'm like gave him the I ate a bug face. But I don't fish in those waters. Good luck to everybody that does. I just be very careful. Again, I'm playing for the long run, and I'm not, there are other protocols that I've looked at in DeFi and NFT platforms and things like that I'll continue to make investments in or trade in and participate in.
So let's just pretend that you're a financial advisor and you're looking at, a very well put together person or a couple, and let's say they obviously have good cash savings, they paid down their mortgage pretty well, maybe they have real estate, they're not hurting, right? But they have no cryptocurrency. Mm-hmm. How much do you think, if there's a number or anything, a percentage of someone's portfolio that they should have in cryptocurrency?
Liquid, 5%.
You think 5%? That's just for any.
So there's a I'm going to put on my Wharton School of Business hat.
There you go.
Modern portfolio theory.
Let's talk.
And you think about diversification. So if you diversify your assets, your risk assets, and you allocate them based on certain parameters that you see fit with whoever your financial advisor are, and this is not financial advice, but I'm just giving you theoretically how you're thinking about it.
Sure, we'll
and you believe in modern portfolio theory, and you believe in diversification, and if you do believe in that, and you don't have Bitcoin, you're lying to yourself, and your financial advisor is lying to you too, right? Because now there's a digital asset class, much like commodities was created back in as an asset class back in the 80s and then into the 90s. It was created more as an investment asset class. You're lying to yourself. And I'll challenge anybody that wants to step up to talk about that. You're absolutely lying to yourself if you believe in diversification and modern portfolio theory. There was a case for Bitcoin. That's it. There's no questions asked.
So you're not like, when cryptocurrency first came out, 2010.
There's 10 years of history of Bitcoin's track record and it being in existence. 10 years of data is a lot of data. And there is an asset class being created, not just with Bitcoin, but with other things like NFTs, digital art, right? And at some point, there will be a category of what we call security tokens, right? That'll be similar to stocks or similar to ADR securities, American Depository Receipts, which are essentially, it's a technology wrapper wrapped around an asset, and they divvy it up and they sell it to people so you can own part of XYZ company or internationally.
So for anyone listening then, and they don't have cryptocurrency, and they say, hey, Yoshi, man, after listening to this podcast, I really got to get into crypto. I really want to make it 5% of my portfolio. Where do I start?
Bitcoin.
Yeah, but how?
How do we start? Open up a Coinbase account.
Coinbase is the easiest.
Coinbase is the easiest way to do it. Fees are a little high, but listen, they have a great platform. They have custody. They have all the things that you need to feel safe putting your money to work in the space.
And do I worry about, hey, it's up 20% today, or hey, it's down 10%? Just do it today.
I would challenge that whatever it is that you or your financial advisor are looking at.
Sure.
What's your goal? What's your plan? Right? Are you trying to trade your portfolio, or are you trying to invest for the long term?
Yeah.
Right? Then you have to think about what it is that you're going to put your money to work in. Right? And there's 3 lanes in the crypto digital asset space that we focus on. Right? There's utility tokens, right? And there's like digital gold, right? So you have Bitcoin. It's kind of in a category in itself. You have Internet 3.0. So all the companies that are going to be at some point built on the back of crypto, like an Ethereum network or other blockchain networks. And then there's another category, which is actually, there might be 2 categories. The third category I would always reference were security tokens. So much like what you see as stocks or bonds and things like that, there's going to be a security token market that gets created at some point. Wall Street works fairly well right now, so it's very hard to replicate or replace that, and nobody really wants to they don't want to have that exposure. They already have that through stocks. So they usually stay in the first lane and the second lane. But what's interesting is what's opening up this category is you have things like NFTs, digital art, right? And you have people paying millions of dollars for some of this stuff now. By the way, digital art is something some of my biggest hedge fund clients like Steve Cohen had already invested in. They invested in stuff many, many, many years ago. Not NFTs, but digital art.
Yeah.
Right? That's a real thing. That's always been there. Right? So here's the interesting category or interesting thing that's happening in this third category. Right? So you have, let's say somebody decides, you know what? I have Warhol, right? It's $50 million. And, I want to own it and control the ownership of it, but I want to sell 49% of it.
Sure.
Right? Now you have a platform that in the security token market or platform that you can fractionalize the ownership of that Warhol, right? And you could buy $100 of it or $1,000 of it, or I could buy $100,000 of that Warhol. Right? And all of a sudden, a person like my mom, who, she might have, 6 figures in the bank from retirement in her 401k, she might somehow, some way have access to get exposure to high-end art that she never had exposure to before. Think about that diversification and what cryptocurrency brings to the table for that. Fractionalization. Again, that's that third category. But digital art is happening right now. You're seeing a lot of celebrities getting involved in it. So just beware of the hype when that stuff starts to happen. But it is a very real category that not just celebrities, but other real investors are getting into.
So a lot of this has been cryptocurrency, but I want to go to the beginning. When did you get into cryptocurrency?
So, was it 2012?
So you've been in it for a minute.
I've been following it for. I will not say from the beginning because that's too early. But 2012 was probably the first time I really started to really lean into it.
What was that story?
From a knowledge standpoint? And there's a big education curve you got to come up. It actually was. Believe it or not, we were on a private jet. I was flying with Mike Novogratz, and I forget where we were going. We were going to an event, and we were there with his brothers and a few other people. And, we started talking about crypto and Bitcoin specifically. And it was really focused around Bitcoin. And when you start to understand what it is, you still have to come up a curve, an education curve on the technology. And people like us who are constantly a student of their environment will then go deep down. They call it go deep down a rabbit hole. Once you get bitten by that bug and you go down that rabbit hole, you never come out.
Sure.
And that's what happens with crypto. And you'll see that time and time again. And what's crazy is when I left Citi to go to Galaxy Digital in 2018, all my Wall Street buddies were like, "Oh, like Yoshi, you're doing that. You're doing this fake money bullshit." I had one guy actually tell me, like, "You and Novo do that fake money bull." And now they're like, "Hey, like, what do I do? Like,
how do I get started?
Where do I put my money? Like, what do you?" Like, "Oh, you can hire me as a consultant for $20,000 a month if you want to, and I'll help you manage your big bags of money, but as a consultant. But I'm not giving this away for free now." And I say that somewhat kidding, but I was contracted by a major investment bank to help them with the crypto project as a consultant, because people have to come up a very, very steep curve in order to understand the space, let alone make a business decision. Treasuries for corporates, people are putting Bitcoin in their treasury. They're not holding dollars, they're holding Bitcoin. Look at MicroStrategies, look at Tesla, right? Look at some of these major companies are holding Bitcoin on their balance sheet now. They believe in it, right? That they've done the work. So my point is that there's plenty of other companies out there that probably should hold crypto on their balance sheet. They don't know how. Part of what I do is I also, there's my investment, my consumer investment business, there's the crypto side, and then in between there's a whole bunch of other stuff. I have the opportunity to act as an independent consultant for people that are trying to figure out what to do with, either the major crypto positions or how they want to incorporate that into their business. And so it's been a huge opportunity because no one's done the work that I've done to get, as high up the curve as I possibly can. And I will constantly do more work than everybody else because that's a wrestler's mentality.
It sounds like you just have an amazing passion for the subject.
That's a big deal.
Yeah.
When you get bitten by the bug, all of a sudden, all bets are off.
So do you think in the future, everyone talks, Bitcoin 100,000, right? It's very, very viable then.
Yeah. We were at, 60 something not too long ago?
I don't follow it too much, so.
You just got to buy and own a little bit. And if you're a long-term investor, those people talk 100,000, people talk 500,000, people talk 1 million. Like, what's your time horizon?
Stevie, how are we doing on time?
We're at 50 minutes.
Gotcha. Cool. We're doing really well.
Yeah.
So hey, we talked a lot about the, business, banking, money, cryptocurrency. I want to get into a little bit different part of the conversation. I really want to get into wrestling.
Yep.
So talk to me about this. Now, you're a 2-time state champ for St. Ed's.
That's right.
And then you went on to UPenn and wrestled there. And I think you had a decent amount of international wrestling too, right?
A decent amount. Not a ton, but a decent amount. Yeah. I was a 2-time All-American at Penn. I won University Nationals in freestyle my sophomore year. Won the Henri Deglon Challenge, which is a big tournament in France. And I wrestled I actually made the U.S. national team. So the top 3 guys at the World Trials or the Olympic Trials at any given year represent the U.S. national team. And so my junior year in college, I took 3rd at the World Team Trials. Actually, it was in Cincinnati, Ohio. And so I got to represent the U.S. on national teams.
Absolutely. So, very tenured in the sport. And you said judo obviously
I could feel it.
Yeah. In the knees.
In the knees, exactly.
So obviously.
And by the way, I love the wrestling mat. I got to give Hesh a lot of credit on that one. That's your workout room.
It is.
Yeah.
I mean,
anybody looking at working anywhere, Liberty is a place to be. Yeah. There's a wrestling mat as a workout facility.
We didn't preface that before either.
Exactly.
That was he did that on his own. So, but in terms of the sport, I mean, talk about what the sport has done to you in shaping your life. I mean, obviously, you said a very tough upbringing, right?
Sure.
Was wrestling an outlet? Was it something that helped shape you when you went, obviously into Wall Street? Talk about how that had shaped you.
Through the good and bad times of my life, as it related to my career or anything I've ever done, I like to think that I'm relatively intelligent. I probably work harder than I am smart, but I like to think I'm relatively intelligent, probably more street smart than book smart, given the fact that I'm from Elyria. Shout out to all my friends in Elyria. At the end of the day, it's about you as a person, your values, how you carry yourself, and there's not a shot in hell that I would allow somebody to outwork me. And what I learned about Wall Street and what I learned about a lot of industries is that there are a lot of people born on third base and they think they hit a triple. And I'll roll up my sleeves and work circles around people like that. And, I might not have the opportunities. And I think that's a very real thing that people have to recognize. I might not have the opportunities, but I've created my own opportunities and luck because of the hard work and the loyalty and the trust, right? And the respect. Those key values that you keep with you as a person and how you carry yourself can pay you in spades many, 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 many years, decades in advance, and then continue to pay those going forward. So, when I learned to take the next steps in the rungs of Wall Street to get into the echelons of not the people that are $100 million, the people that are worth billions, it was about trust, hard work, respect, right? Again, everybody on Wall Street's pretty intelligent, right? Can you outwork them? Can you outwork them through the really hard times when people were quitting or getting fired, or can you stay focused on doing what you needed to do to achieve your goals? And so our family values are very simple in how I grew up, right? Be a good person, do the right thing, set your goals high, extremely hard, and work hard to achieve them, and respect people in their culture. And those simple things can carry you and your family and your business for a very, very long time, right? There are always pitfalls out there. There are things that are uncontrollable, right? I can't stop Putin from invading Ukraine to stop oil prices from going up through the roof because sanctions are being put. I can't stop that. But what I can do is I can work hard enough to figure out what are the right angles to make the next move, right? And to be honest, I don't want to say I get excited because I think this is a really hard time with what's going on in Europe and Russia and Asia and Europe. But I get energized. And that is to think out of the box, to think about what the next move is, to how to risk manage my family's life or my financial life or, what I want to do over the next 5 to 10 years, right? It's a dynamic mental playbook that gets energized, and that's intoxicating. And that's the one thing that I think when I jumped into the crypto space, the best phrase that I could think of, when you work so hard at something, it really becomes intellectually intoxicating. And it's probably becomes the crypto became one of the most intellectually intoxicating environments I'd ever been in because of the firepower of other people that got bitten by that crypto bug. But a lot of people fizzled out because they didn't have the mentality of a wrestler, right? And so bringing it back to wrestling and what wrestling has given me, it's being disciplined, working through the hard times. I mean, think about the day of weigh-ins for World Team Trials. I had to cut 10 pounds to make weight, to make 152, 10 pounds, right? That's hard, but it's not harder than what my mom had to do to get me and my brother to go to St. Ed's and having no money and figuring out how to get us to a private school. You start to think of like, okay, that toughness comes from wrestling and my family values and what my family stood for. So I think those two things, when I marry those two things together, that's really what you extract from wrestling to be the person to be the person I am today.
Mm-hmm. And I love what you said. There's so many uncontrollable things right out in the world, and related to wrestling. Hey, ref makes a bad call, you can't control it, or something.
Got to take the ref out of the equation.
Exactly, but there's a lot of things out there in life that obviously you can't control. It's like, hey, do you quit or do you keep moving forward? Like, in our industry, in my industry right now, a lot of people, there's big lack of inventory with housing. Yep. So a lot of people, and interest rates are high. So everyone who was in the refi world is either quitting, they're just exiting the industry, or they're moving into purchases. And a lot of these people, they don't really know a lot to do with purchases. Sure. But it's inflated my job market, right? Yep. So we were talking to like all these different situations that are just kind of bubbling up. Yep. And it makes it very, very hard. A lot of things I can't control or anybody else can control. It's like, hey, what do you do when going gets tough? You did really well the last 2, 3, 4 years, but now everything's getting tough. how do you respond, right? Yeah. I think that is.
It's a wrestler's mentality.
It is a wrestler's mentality. Yeah. But yeah, that's awesome. So
look at what Kesh did.
Incredible story. Yeah.
Again, I worked at Citi. We were at the focal point of the whole mortgage crisis. He's the man. What he's done to build this business. And then rebuild it, reinvent himself within the same industry. Amazing. And but that's a wrestler's mentality, right? He's on the desk making calls and doing work right next to everybody else. That's the same way that a guy like Mike Novogratz thinks, or a guy like myself thinks. People that are entrepreneurs that become successful, like they all have that same kind of wrestler's mentality. Too stubborn to quit, I guess.
Yeah, I also think it's just, listen, like the good times don't last and the bad times don't last, right? Yep. So, you could be doing really well for a long period of time and then all of a sudden, shit hits the fan and, obviously it sucks, but you'll get past it eventually if you work hard enough. But a lot of people just don't see that sometimes. They don't see the gold on the other side, which is one more stroke and then you're good there. And sometimes it takes that discipline, to be able to just say like, hey, I'm right there. I can't quit now. But a lot of people, I don't know. Maybe that used to be a very American thing and maybe now it's molded to just a wrestling thing. I don't know.
No. There are definitely people out there. So they're actually, this is a generational thing. So if you think about the baby boom generation, right? All you hear from a lot of them is like, oh, the younger generation is lazy. They don't know what they're doing. They're just on their computers and this and that. And in actuality, with all due respect to all the baby boomers, we're just thinking about and doing the world differently, right? And so there was a gentleman named Rich Barton that Zillow, which is the real estate company, which you guys know. So I helped take that public. I was at Citi when we took that public, and I was on the roadshow team in New York, and so we met all of my major investment clients and hedge fund clients, and I got to travel with Rich Barton, the CEO of Zillow, and his businesses that he creates are very focused on, at the time, putting the power in the consumer's hand, right? So he was Microsoft, Expedia, and then Zillow, Glassdoor, and however many other companies he's created. But he was all about putting the power in the consumer's hand. And I never lost sight of that aspect of what's important and how you make decisions and how you move forward. And I'm kind of on a tangent here, so bring me back. He really changed the way I thought about, looking at companies, how industries develop. And when I hear the baby boom generation saying they're lazy, I'm like, no, we're just doing it differently. Mm-hmm. Like I use Skiplag now to book flights because, I might not be able to get a direct flight somewhere, but if I can get a connecting flight to that same city and I'm just traveling for a half a day, right? It cost me $80 versus $300, right? Because it's a connecting flight. There's things like that that are being created, and I'm sure they'll put some laws around it where you can't do it at some point, but that's, the government and industries are over-regulating stuff, but we haven't gotten there yet. But my point is that, like, you can this whole work from home scenario, right? My father-in-law still gets up every day and he goes to, his job site that he runs, and he still works every day. But both my wife and I have home offices now. She works at PNC Bank, and, I run my own business, and I work remotely, right? And I go travel, I see my businesses, but I sit behind my computer. I look at my DoorDash orders, right? I look at my Uber Eats, Postmates orders, right? Online. I reconcile all the financial statements, right? Work with our accountant to make sure all the bills are paid. But I'm actively engaging in customers that are using our online ordering system, right? Mm-hmm. The power's in the consumer's hands to buy my product or our store's product, right? So I'm actively working, and in many cases aggressively working, responding to stuff. That's not lazy. I'm just doing things differently. So here's what's interesting about that baby boom generation gap and the younger generation. There's actually Generation X, which is in the middle of that. That's my generation. I look at Hesh, I look at some of these other guys, because they marry this old school mentality, and I would arguably call that the wrestler's mentality, right? With this new age technology mentality, right? And we're the bridge that will be the kind of generational leaders of the next. And look at what he's doing. Look at what I'm doing. I have this old cash flow brick and mortar QSR business, but I'm investing in crypto, right? Because I understand both worlds.
Yes, absolutely. Yeah.
So for me, it's an interesting dynamic that's happening right now. And I actually don't think that this younger generation is necessarily lazy. I just think they're doing things so differently. So differently that this generation can't understand. And by the way, this generation is looking at why would you do that this way? And you guys don't understand what we're talking about. But the Generation X gap, a bridge is what bridges the gap between those two generations. Absolutely. So it's generational, actually.
Absolutely. And Robert Greene, author of Laws of Human Nature, he talks about, generational narcissism. As we wrap up, Yoshi, amazing podcast, man. I loved it. It was so fun. We love to end every podcast, though, with a little bit of advice, right? And we like to do a little bit of a narrative, right? So kid coming out of college, right? We'll see right from Cleveland State University, coming right out of college, and he or she doesn't know where to go right now, and it's kind of scary right now. What's your advice to him or her?
Well, always remember whatever job you take is your first job, not your last job, right? And experience is very, very important. But go seek out opportunities with people that you'd run through brick walls for free, right? And that's crazy because in my life, I would have never thought that I would have ever worked for free. But sometimes when you want to create something or get to a point where you think you want to be, and by the way, that is going to change. So keep your future dynamic. But think about what drives your passion. And if it's crypto, there's more to come, right? There's a lot of opportunity in that space. There's a lot of intellectual firepower that's being thrown at that space. There's companies that are being created, whether it's exchanges or trading companies or different NFT platforms. There's stuff coming in that space that could be really intriguing. But in the meantime, get experience, right? Do what it is that you are passionate about. And that's so cliche to say. And I will tell you what, I suffered through a lot of stuff that I otherwise wouldn't have thought that was my passion, like that was going to help me with whatever my passion was going to be. But it did. Like I worked as a general salesperson, when I started at Citi, and I learned so many things about so many different industries that I feel like I can talk dangerously about almost everything. And not that I would brag that, again, I work harder than I am smart, right? But I'm able to gather information and data points and make educated decisions because of my ability to accumulate broad-based industry data and then kind of boil it down to a smaller synopsis. You have the opportunity to go and get experience, go get it. And if you think that if you need a certain component of experience that could help you with your long-term vision, go get it. Right? Get after it. Don't sit around and wait because somebody else is going to take it. Or by the way, that time might pass and your vision may change and you may miss that piece of experience that you could add to your foundation of what you're trying to do. And whether it's build a company in the future or build a career or whatever it might be, like you can't stand still. Right, you have to move. You have to get going. You have to get started. I think was it Zuckerberg. Zuckerberg said that, or I forget who that quote was. Whatever you do, you just got to get started. And, a lot of people have been frozen in their tracks over the last 2 years and they don't know how to get started. Just go. Remember, if you take a job, it's your first job, not your last job.
Love
right?
it.
And the employment is plentiful.
Love it.
So actually one of the things that I was actually thinking about doing, is, in my community in Virginia, we have a great staff and team at Bojangles, but I'm trying to think about how do I attract, the younger generation into the stores to work, right? And we're, whatever, they just raised minimum wage in Virginia. But one thing I thought was, for summer employment, to bring in some of the younger people, I may actually do a seminar once a week in crypto. And they can all log into it. Well, if you're an employee at the store, and then the existing employees can work there too. I'll do a seminar just for my employees. Like, you come work for me for the summer, and once a week we will do a 30 to 45-minute tutorial on crypto and the crypto markets.
That's awesome.
And guess what? Nobody else in my industry can give that except for me. And that actually beats, someone saying, hey, I'll pay you $15 an hour and they're going to jam you with some like horrible schedule that you don't want to work, or you can come work for me and we can create a flexible schedule for you to work for the summer and I can teach you about Bitcoin. Like, how does that sound? How does that feel?
I'll work for you.
Right?
Yoshi, it was a pleasure.
Absolutely.
Thank you, sir.
You're very welcome.